Alright, welcome to this new video. In this video, we're going to talk about when to trade and when not. And this is a fundamental video. Most of the other videos in this channel are about technical analysis. This one is going to be about fundamental analysis. First, we're going over the framework, about when to trade and when not. And then we're going over some examples. So without further ado, let's dive in. The primary rule where you should focus on is that the economic calendar is your roadmap. So during the week, when there is no news, there will be no volatility injection. There will not be a spike in volume in the market. And when you have a clear draw on liquidity, you want a red folder, a big news report, to be that catalyst, that extra volatility to push price towards your draw on liquidity. That means a day without a red folder, a big news report, is most likely not going to be a very large range day in general. And the first step you need to do is every day look at the red folders on forexfactory.com. On a screenshot on the right of the screen, you see that, you see the filters I'm using. I'm using a red folder and a gray folder. Red folders are the biggest news reports. Gray folders are bank holidays. Also on bank holidays, the lowest volatility news, because when the banks are closed, there's way less volume in the market, and the red folder is the most volume, so that's why I'm focusing on that. I'm not focusing on orange or yellow folders because those won't have the same impact as red folders, so I'm completely ignoring those. Next to Forex Factory, I also use a Telegram channel. It's called Forex News at Fundamental. I will leave the link towards this Telegram channel in the description, because when there is no red folder but you see a very aggressive move in price, you know something's going on, and that's probably on the red folder. And then most of the time on Forex News, there's maybe a intervention from a bank or something different than a red folder, or a black swan, or another, or a big impact news that is not one of the red folders, so you know what's going on. So when to trade is on red folder days, because that will give you that volatility spike towards drawn liquidity. When not to trade is, I think, the most important one. That's on days without red folders. And the most important rule is here, you have the three big boys. You have FOMC, CPI, and NFP. The three biggest news events in the month, and you shouldn't trade prior to those three news events. So you can trade after, a few minutes after, of course, but not before. So when you have FOMC in the afternoon, or CPI and NFP are most of the time at the New York AM session at 8:30, you don't trade before that. Why is that? Because price likes to or seek and destroy profile, or it likes to consolidate. And there you cannot find that high probability trades. The second question you might have is, when you have a red folder on a certain day, when can you trade before the red folder, and when can you trade after the red folder? And I'm not talking about the big boys, not about the big three, FOMC, CPI, and NFP, but I'm talking about the other red folders, unemployment claims, jolts, etc. And here's the rule of thumb. Look at what price did prior to the red folder. And where you should look at is, prior to the red folder, did we have a sweep on liquidity before displacing upwards? If you have the sweep before the red folder, you are clear to trade before the red folder. But when price before the red folder did not take out any significant liquidity pool, you can expect that price during the red folder is going to sweep that liquidity before moving upwards and making the real move. So if before the red folder there's no liquidity sweep, don't go trade, because price will just take you out during the red folder and then go to your TP. Then it's just a matter of waiting. And third, there's also a situation where you have two red folders during your New York AM session. And then you can expect that 8:30 is probably going to be the manipulation, so the liquidity sweep, and the 10 a.m. red folder will probably provide you with your entry. So you have the liquidity sweep, then during the open it will displace upwards, 10 a.m. will give you that retracement towards your entry, and then it will go to your desired drawn liquidity. So to summarize, you have basically three situations. If there is a liquidity sweep before the red folder, you can consider taking the entry already. When there's no liquidity sweep prior to the red folder, you should wait, because probably the red folder will take the liquidity. And if there's two red folders on 8:30 and 10 a.m. most of the time, when there are two red folders, expect the first one to be the manipulation to sweep the liquidity, and then the second one to be your entry to expand to your drawn liquidity. In this first example, we're looking at the Euro USD at the 15-minute chart. And as you see here, we have news at May 30 at 8:30, and we have news at 10 a.m. So when you have a red folder, first thing, prior to the red folder, you should think about did we already sweep liquidity prior to 8:30? So let's see what we do prior 8:30. 7:30, 7:45, 8, and here's 8:15. Do we already have the sweep of liquidity before the red folder? Yes, we take out these relative equal lows before the red folder. So here, prior to the red folder, you are allowed to take an execution because we already took a liquidity. And at 8:30, you see the move up. Then the same question at 10 a.m. Are you allowed to trade before the 10 a.m. folder? Did we prior till 10 a.m., did we already take out some form of liquidity? With the 8:30 news, we created this newly created fair value gap. At 9:15, we already traded inside this. This could already be seen as a small sweep liquidity. And here at 9:45, you see we sweep the liquidity again here inside this fair value gap. So here again, before 10 a.m., we have a sweep of liquidity. So here you can take another entry towards drawn liquidity. And this order flow, the target drawn liquidity is higher. See at 10 a.m., we go higher. In this next example, we're looking at May 28th, and we have a red folder at 10 a.m. The question is again, are we sweeping liquidity prior to 10 a.m.? Where's the low-hanging fruit liquidity pool? It's below these equal lows. So let's see what we have before 10. And at 10 a.m. is right here. Well, again, the question, did price swap liquidity before 10 a.m.? Did you find an entry before? The answer is no, because the real move happens after 10 a.m. So then you wait. And how would that look like? You wait for that signature in price, aggressive sells out of the range, aggressive buys into the range, and you get your fair value gap entry right here, and price moves away higher. And this example, we are at NASDAQ at the 5-minute at May 31st, and we have news USD at 8:30. So then again, the question, did we sweep liquidity prior to 8:30? Just before 8:30, we are sweeping liquidity. So there's no room for an entry before 8:30. So then we wait for 8:30 to do its thing, goes higher into a premium array. But we have a drawn liquidity that is below here. That's a 1-hour busy. So then we just wait for a move lower. And you get that displacement lower, fair value gap. And then price goes through the target of the 1-hour busy. So here, this example, prior to 8:30, we didn't take any liquidity yet. The liquidity was at 8:30, and it was right here, around 10 a.m., the opening range to go lower to drawn liquidity. And if you're looking for a 1 to 3, it will look like this. If you want to do stop at the highs, you have around a 1 to 4. Thank you for watching this video. In this video, we went over when to trade and when not to trade, how you can use Forex Factory to determine when news volatility comes to the markets, and what you can do prior or after red folder releases. If you like this kind of videos, please like and subscribe, share it with all your trading friends, and I'll see you in the next one.